This is the Carl Miller Show, where we talk about all things real estate, financial investments, and getting into a home you love. With over 15 years of experience, this is your host, Carl Miller.
Today we look at the mid-year housing market update. Why did the housing forecast change in 2026? And could moving a bit further away change everything about your budget? Hey, thank you for tuning in. I'm Carl, your host, the principal broker at Carl Miller Realty. We're Lynchburg's first certified full-service brokerage, and we're located at 7700 Timberlake Road in Lynchburg. We are your caring, competent, trusted advisors for real estate sales. If you are a homeowner or an aspiring homeowner, this show is for you. I'm in a network as well of the best realtors in the United States and Canada who operate with skill and with a relational approach to meeting your housing needs. So whether relocating to or from Central Virginia, we've got you. I want to give a open house announcement for today. This is going to be for Saturday, June 13th. So if you're listening live on Saturday from 2 to 4 today, this will be Saturday, June 13th. The address is in Alta Vista. It's at 1010 Lynch Mill Road. 1010 Lynch Mill Road. This is a great little starter house. It's a 2-bedroom, 1-bath, 1,130 square foot home. It's priced at just $129,900, a good entry-level house. It might be a good investment property if you want to own some rental properties. Standalone house. You can go to carlmillerrealty.com, ask for Jenny. Jenny is going to be hosting that. And again, it's Saturday from 2 to 4. Stop by, take a look at a really nice little cute, affordable housing. Could use a little bit of love, but it's a great value. It's a great price. I want to thank our sponsor, Gary's Garden Center, as well. Spring is in full bloom right now. And Gary's Garden Center, they are ready to help you create your own slice of paradise this summer. You can step outside of your own house, pick a ripe tomato. You can, while admiring the vibrant blooms of your favorite flowers with the fresh scent of lavender filling the air. Whether you're a seasoned pro or just starting out, Gary's Garden Center has everything you need to bloom and grow. For a great selection, expert advice, and friendly service, visit Gary's Garden Center at 794 Leesville Road today.
It's time for a new featured listing from Carl Miller Realty.
Well, there's an extensively renovated and a move-in ready home in Boonesboro, just a couple of minutes from the Boonesboro Country Club. This home offers over 5,000 square feet, and it is renovated, updated, and it's a gorgeous double lot property. There is a dog park on this property, an in-ground pool, a 7-person hot tub, a fully updated kitchen. Just beautiful, beautiful property. The downstairs is mostly finished. There's even a wine cellar complete with cypress walls and ceilings. And then upstairs, the owner's suite is just unbelievable. Very, very nice. Too many upgrades to list here. This property is listed for just $749,900. It's located at 1107 Boonesboro Place. You can visit carlmillerrealty.com and check it out. And just ask for Shane. Shane has the co-list on this one here. Lots of renovations, including new electrical, new plumbing, a new roof, new floors, and lots of renovations. It's just too much to describe with a short little blurb on the radio. You've got to check it out. It's, again, located at 1107 Boonesboro Place, priced at $749,900. Well, the mid-year housing market update, there's been some changes since the predictions initially went out at the end of last year. And even on this show, I kind of gave a bit of what I kind of saw coming down the pike for the nation, just for national housing. And I'm going from memory, but I believe I had predicted we'd see 14% more sales in America this year in the United States. We'd see prices kind of up a little bit, a few points. But what we were super excited about was seeing more volume and also interest rates dropping. And the National Association of Realtors, along with other economists, have kind of changed the mid-year housing outlook. And so I'll just say this, if the housing market feels confusing to you, you're not alone, and I'm in this business full time. And it's a mixed bag. It's a strange market. I've seen, there's some houses that go on the market with multiple offers. They sell really quickly, and the sellers are getting list or above list price. And then other homes are sitting out there for months with no action. And so It is a little bit of a confusing time in the real estate market. And then there's so many different areas, different regions, different zip codes that have completely different markets than one state over, or even just driving 30 minutes one direction, you can have a completely different market. So all real estate is local. We're going to break down a little bit what's happened. So at the end of 2025, the economists were forecasting a much stronger housing market for 26. They expected mortgage rates to come down. The affordability was expected to improve more dramatically, and just in general, the home sales to rebound. But what we've seen is lingering inflation, economic uncertainty, growing geopolitical tensions overseas. And what that did is it pushed mortgage rates higher than expected. When we got to the middle of February, end of January, we were down to under 6% on mortgage rates, which is pretty awesome. And but what happened was we had a war break out in Iran, and all of a sudden these lower interest rate days kind of went away, and we've had some challenges. Anthony in the studio, he's the producer, aka Biscuit. He's nodding his head. I tell you, it's been a strange year in the economy.
Oh, well, and it's at least seemed to me to be that it almost is weekly. You'll hear on a Friday, this is the worst the economy's been in years, and then the next Friday you'll hear it's never been better.
Right.
It's never been better. And then the next week you've got the same, where it's like, oh, we're back to being bad again. It really has just been this volatile up and down seesawing that is pretty impossible to predict.
Yeah. So I'm in a coaching company. I've had a business coach ever since 2006, and my business coach is just an incredible coach, and she's seen all kinds of stuff. And I've been selling real estate for 21 years, and so I've been around the block a time or two when it comes to some changing economies and markets. And this week, our entire team, we had a team call with my coach, and she said, this is what I see, like the last 3 years, and for real estate agents. Now, you won't hear this in the national news, but for real estate agents, it's been the most difficult market in the last 80 years.
Wow.
And even worse than the Great Recession. And she said the reason that it's challenging for real estate professionals, again, this show's not about me, but the reason it's been challenging is that in 2008, everybody knew it. 2009, we had the Great Recession. People felt it. People lost jobs. There was just all kinds of very, very big challenges, and home values dropped. So what we've had the last 3 years is that home values haven't dropped. In fact, they've gone up. But the volume of sales has dropped just significantly. And even the data year to date shows out the volume of sales is just down significantly. And then you combine that with a lot more real estate professionals, and I use that word in quotes, a lot more real estate agents in the market kind of competing for the same business. So for the real estate agent industry, it's been very challenging. And then you combine that with, federal lawsuits where national companies, the franchises, literally lost 40% of their cash. Their reserves are stripped out. And it's just been really, really trying for the real estate industry. Now, that can sometimes be a good thing. That creates innovation. It creates creativity. It creates sometimes a better experience for consumers, for the clients, for the end user, but not always. And it's been a mixed bag even there. But just for the real estate industry, been very, very, very challenging. And with interest rates being higher than we've seen, affordability index being lower, we're going to talk about this in just a second. What that's done is it's kind of created this market where we've got sellers that are locked into a 3% interest rate. And why would you ever want to give that up?
Right.
And so the only reason that some people are moving is that they just have a very, very compelling need. Yeah. And until interest rates get down to the mid 5%, maybe 5.8%, it just makes more sense for people to kind of stay and endure the pain of a house that isn't the ideal house for them because of the affordability index.
And I think that's sadly going to be something that we continue to see happen.
Right.
I mean, and on the other end of that, I mean, we've talked about the fact that, first-time home buyers, that age is getting closer, if not already to 40 and above. Young people still can't afford houses. And in this market, it's really not going to get all that much better. It
requires a big sacrifice. It just does. And a lot of creativity, a lot of things like house hacking where you're bringing in supplemental income from some roommates. You're getting a second or third job to pay for the house, to get the money saved up to get to that point. No, it is challenging. And the first house is the hardest one to buy. Because after you're in it for a few years, you got some equity build, and then it's easier to step up after you have 5 to 10 years under your belt as a homeowner. But let's get back to the forecast being revised. Here's what's happened. So the mortgage rates at the end of 2025, kind of going into from November to December of 2025, going into January of this year, the prediction was that interest rates for the year of 2026 would be at 6.12% on the average. Now, there was a lot of economists really hedged their bets. And if you remember the show I did where I gave my predictions, I mean, nobody knows. And I just said, I think it's going to be between 5.8 and 6.2%. Well, what the number from a national standpoint for the average of the year was going to be 6.12. Well, that's now been revised to 6.37%. And it doesn't sound like much, but that's about 0.25% higher. And it does make a difference on people's payments. It does make a difference on the affordability index. So the new forecast has been revised to 6.37%, up from 6.12 as an average interest rate for a 30-year fixed rate mortgage for the year. The existing home sales, this is the one that they've adjusted downward. I'll be honest, I don't think it's down low enough based on what I'm seeing, at least in South Central Virginia. Now, again, all real estate is local. I'll give the numbers actually on the market statistics shortly here for what South Central Virginia looks like. But the prediction was that the home sales were going to be up about 17%, going up to 4.5 million existing homes selling. Just for a frame of reference, 4 million had sold previously, and the new prediction is 4.2 million. I think could be, I hope I'm wrong, but I think actually it's going to be closer to that 4.0 than the 4.2, just based on what I'm seeing. I talk to real estate agents and brokers all over the U.S. I know what's going on in the U.S. New home sales, now this is new construction. A lot of optimism going into early 2026. We expected 720,000 new construction home sales. That's been revised to go down to 680. Now this is single-family homes. And then the median home price, this is the one thing that's gone up. The median home price was expected to rise 2.1%. Because of this constriction of supply, the home prices are actually now being predicted to go up 2.6%. Not a significant change, but again, a half a point more. That's the one statistic that I can't explain.
But even then, looking at this chart,
yeah,
the numbers that you don't want to be going up
are
the ones that are going up, and the ones that you do want to go up are the ones that are going down.
That's the one going down, exactly. And so that's probably the most important takeaway of the entire forecast, that even though sales activity is slower, mortgage rates are higher. The price, they're not predicting the prices to go down. They're expecting them to go up nationally this year. And the question is why? And it appears that buyer demand has softened. The number of homes for sale is still relatively limited. And this is the thing, is that there is a supply constriction. So if you put yourself in the shoes of a buyer, and if you're listening today and you're trying to buy a home, there's just not much selection, at least in South Central Virginia. Now, there are certain markets where that's not the case. Jacksonville, Florida, Tampa, Florida. I hear lots of homes for sale, lots of choices. Homes have been on the market a long time. Prices are dropping even further. Those were markets that were overheated. Those were markets that had 20% appreciation in 1 year, 20% appreciation the next year. So again, just an overheated market. Those markets will adjust when you have that kind of that's unsustainable unless wages keep up with that growth, which didn't happen, of course. So, but the number of homes for sale, just overall, it's relatively limited, and that imbalance is keeping prices high and higher and appreciating even higher than originally forecasted, even though the market's slower. So conditions do vary depending on, again, where you live. Some markets are cooling more than others, but nationally, experts are still projecting just steady price growth, not a major decline, which is what you might expect when you see slow sales, higher interest rates. You kind of would expect prices to not appreciate as rapidly. And by the way, declining sales for both the resale market and new construction market. So it's a supply issues. And sellers, typically don't want to see a major drop in prices. And buyers may think they do because you feel bigger about a big purchase. But what you don't want to do as a buyer is buy a home and then have it depreciate. And so as long as the supply is constricted in the United States, and as long as demand, I mean, here's what we know. Demand's going to always still be there. Houses are going to always be in demand. What we're seeing nationally, and these are national numbers, we are expecting prices to continue to appreciate. I'm going from memory what I'd seen on the national forecast, and I think that I was thinking that prices, the national forecast was, well, we know what the national forecast was, is what's the number again? It's going back to my chart, 2.1% was the prediction. And I believe that the NAR had put out a report that kind of expected them to go up about 2% as well. By the way, just frame of reference, 2025 saw 1% appreciation, but now it's just climbing.
Yeah, it would kind of be a kick in the pants when you buy a house, expecting it to be an appreciating asset.
Right.
At that point, you're like, man, I just spent like $100,000 or $400,000 on a nice car that can't go anywhere.
Yeah, it's interesting. It's not quite, housing is not quite the commodity that gold or silver or diamonds or, and if you want to throw in cryptocurrency, you don't have the fluctuations there. Housing does not have that. That's one thing that housing is. It is a sustainable, stable asset. But here at the end of the day, here's where we are. The bottom line is that the housing market hasn't rebounded as quickly as far as the number of sales. It just hasn't rebounded as quickly as experts hoped originally, but that does not mean it's stalled. Higher inflation, lingering economic uncertainty, we're expecting less sales this year. But importantly, when those two things settle down, and this would be the interest rates and the supply, when those two things kind of stabilize, the market's going to regain its momentum. So don't see this revision in the forecast as a sign of trouble. It's more of a temporary reaction just to overall conditions and uncertainty. I mean, just fill up your tank with gas right now. We all know it's up, so that's what's going on. Here's what I would just share. If you want to know what's going on in our local market and what could it mean for your plans for the rest of the year, or if you need to know exactly what your house is worth, that's where we shine. Call us, connect with me, and we will run a report for you and help you get where you want to go, show you accurate numbers so you can make a confident, informed decision. Hey, when we come back, we're going to talk about how moving a little bit further away could change everything about your budget. Welcome back to the Carl Miller Show. I'm Carl, your host, principal broker at Carl Miller Realty. You can follow our social pages. Sierra, she's our creative director, continuing to put out engaging content. And we are giving away a really nice cooler filled with lots of Independence Day goodies for you and or your family. So check it out. If you just go to @CarlMillerRealty on Facebook and Instagram, pinned at the top of the page is the giveaway details, and it's a pretty sweet cooler we're giving away. I think it's a Pelican brand. Pretty awesome.
It's time for Carl Miller Realty's Local Stat of the Week.
Someone asked me this week, are home prices lower than last year in Lynchburg? We just talked about the national data. Well, here's the facts. Through June 20th, 2026, so this would be year-over-year comparables versus 2025, same time period, the local single-family home sales volume is down 17%. 17% fewer homes have sold in 2026 compared to the same time frame in 2025. In fact, only 948 single-family homes have closed in Lynchburg and 3 touching counties. Again, this is through June 20th. Median prices, though, are up 2.3%. From $314,000 last year to $321,443. That's a 2.3% increase in median sales price. The median days on the market for homes that closed through June 20 remains virtually unchanged from last year at just 14 days. So in summary, the amount of homes that closed locally is down 17% and prices are up 2.3% year over year. So that's a long answer to a short question. Are home prices lower than last year in Lynchburg? The answer is no, they're up. And they're up 2.3%. And by the way, I am confident of this, that the greater Lynchburg market will just continue to see good appreciation over the next 5 years. I just don't see how it's not going to. The national home price is $420,000, And, again, single-family homes, Lynchburg, 3 touching counties through June 20th this year, 321, 443. So we're well below the national average, and that's a lot of money coming into this market. So the question is this: could moving a little bit further away change things about your budget? And I want to just kind of start this segment by just saying, that if you really boil things down, there's 3 reasons, 3 factors that come into play when a buyer chooses their home. Number 1 is location. Everybody kind of wants to be in a certain area, a certain distance to work, school, church, social centers, whatever. So location. The second thing is, and I'm going to kind of lump 3 things in: the architectural style, the features, and the condition. So basically the home itself. What's the features, the condition, and throw in architectural style of the house. For example, some people choose not to look at certain architectural styles. If you want all one level, you're not going to buy a split for your house, for example, or you're not going to buy a home with 2 stories with a master bedroom on the 2nd floor. That's not what you're going to buy. You want everything on one level. So, and then the third thing, along that features is like the features. If you need a fenced yard, for example, if you insist on having off-street parking, those types of things would be the features. So basically, what does the house feel like? So location, let's just call it architectural style and condition for the second factor, and the third factor is price. And I know for a fact that it's hard to get all 3. I mean, unless you just have a massive budget and money's not a consideration, it's really hard to hit all 3 of those things. So the one area you can compromise in that becomes a game changer for your budget is the location aspect. So if you're willing to drive an extra 10 minutes or 15 minutes or even 20 minutes to your work, it makes a difference. It makes a difference in what your affordability index is. I mean, I just talked about at the beginning of the show, we have a first-time home buyer house, a 2-1 on the market right now that's open this afternoon from 2 to 4 for $129,000. Now, that's not going to be your forever house, but it's a great starter home and it's a great price. And all of a sudden, those payments become affordable to a first-time home buyer. So this is a survey according to Pods, the storage facilities, those little pods that go across the country. They did a study recently, and 61% of people across all generations say that affordability is the biggest factor when deciding where to move. So the affordability of this, and I would just say this, it doesn't even matter what the purchase price is, but what matters is your monthly payment. You got the interest rate, down payment, all that stuff, and it becomes a monthly payment aspect. So the affordability index, that's the biggest factor when people decide where to move. And it's led a growing number of people to do one thing, and that's this: broaden their search to include more affordable areas that they may had not considered before. Pods write in this article, moving is increasingly driven by affordability, connection, and quality of life. As economic pressures persist, Americans are taking a more intentional, values-driven approach to where they choose to live. So it's and keep in mind, it's not just the home price, but it's the whole cost of living. And this is where a couple of considerations. If you're considering moving, say, outside of, let's say you're looking at Lynchburg, you said, hey, I can get another house outside of Lynchburg for maybe $30,000, $50,000, $100,000 less. So when people talk about moving for affordability, they're not just talking about finding a cheaper house. They're talking about the full picture. What does it actually cost to live somewhere? So a couple things to consider is, if you're looking kind of across the country, you can look at states. But even, I would say this, even if you're looking locally, you can look, let's say you're looking, let's keep this a local conversation. If you're looking at Lynchburg, and if you moved it down to southern Campbell County, for example, you can get a lot more house for a lot less dollars. But then keep in mind, there's going to be some other increased housing expenses. You're going to have gas, tire wear if you're driving to Lynchburg every day, for example, to work. But then some of that's offset by lower tax base. And, just kind of look at the overall picture. What's the total, cost of housing or living in this location? But state by state, the people spend, there's a map that Wallet Hub has put out recently. You can go to wallethub.com and you can actually get this map. And if you put in your Google search engine where people spend most and least on housing, Virginia, it's kind of in the middle. And this is a percentage of household income based on your monthly income. And in Virginia, it is right at 25%. Now, that's a statewide average, so it's going to look a lot different in Lynchburg versus Fairfax. I can promise you that. But the average in our state is 25%, which is right in the middle. The lowest price states are Iowa at 17.3%, Kansas at 18.6%, and unsurprisingly, if you go to the far west and the northeast, Those are the highest ones. California, by the way, is 41%. Maine is pushing just under 30%. New York is a little bit over 30%.
Hawaii is 50.
Oh, gosh, yeah. Hawaii is the highest. Oh, my gosh.
That's insane.
Having just been to Maui in early May,
Yeah.
I was shocked at the price per square foot for a tiny little house, what the prices are. Yeah, Hawaii is.
That's wild.
And and by the way, not just the cost of a house. Everything is expensive.
Everything's expensive.
You're importing food. Gasoline. You're importing everything. Groceries. We went to the grocery store just to buy it. We stayed at some of my friends. We stayed at a little Airbnb, and what should have. And I guess I get it. Groceries are expensive. I get this, but I kind of know what $200 of groceries is going to
looks like.
Yeah. And so assuming that we bought, and I'm putting in quotes, $200 worth of groceries, it was 2.5 times. It was like $500. So. Yeah, it's quite pricey there. So yeah, Hawaii, it's a beautiful place, I will say. But housing is very high there.
You're paying for the beauty.
You're paying for that view. And the weather. Oh my gosh, the weather's incredible. So yeah, and the sea turtle views.
Yeah.
From the ocean. But yeah, so again, if you're looking to move anywhere in the country, the Midwest is definitely more affordable. West Virginia is another one of those states, 18.4%. But I will say this, you don't have to move to another state to find a better deal, because just as we talked about, most markets, they got these little pockets that buyers may not think to explore. Neighborhoods, towns, communities where home prices are lower, property taxes are more manageable, and the overall cost of living just works better. So this is the value of working with a local real estate agent. So whether you're buying here in Lynchburg or you're buying in Texarkana, it doesn't matter, or Des Moines, Iowa, working with a local real estate broker or agent, I should say, who's got some experience and knows those markets, they'll be able to help you. Like if you say, hey, look, where can I buy? Maybe that would be a little less price with a 20-minute drive. It's amazing what a 20-minute drive will do. The old adage in Northern Virginia is just drive south till you can afford it. And hence a lot of people coming from Northern Virginia down to Lynchburg, Virginia.
Oh, yeah. I was one of them.
It makes a lot of sense to me. So, but do keep in mind the overall cost. And here's the bottom line. Affordability, it is a real challenge, but it is solvable. I mean, it's a solvable problem. The key is being open to places you might not have considered before. And again, just understand this is kind of a stepping stone. It's not going to be your forever home, but a local agent can really help you find that home.
It's time for Carl Miller Realty's Fun Fact of the Week.
The right listing photos make a huge difference online. For most buyers, the home search starts online, and photos are the first impression a property often makes. High-quality photography helps your home stand out, attract more buyers, and generate greater interest from the start. That's why we work with excellent professional photographers who know how to capture your home's best features and make that first impression count. Well, if you have real estate questions you want answered, hit us up on our social media platforms. That's at Carl Miller Realty, or give us a call. I want to thank our sponsor, Gary's Garden Center. You can visit garysgardencenter.com or go visit them on Leesville Road today. They've got hanging baskets and large pots of flowers that will instantly add a bright, welcome feel to any home or business. If you don't know what to get, the team there are always happy to point you in the right direction. Hey, I want to thank you for listening today. We are your local, caring, competent, trusted advisors for your real estate needs. You can contact us today. And again, we have friendly, caring, competent admin personnel ready to take your call, ready to serve. Call us today. You won't be disappointed. And we would love to help you make a confident housing decision. We'd love to help you get where you want to go. Enjoy the weekend, everyone, and we'll see you again next week.